In this video, we're going to talk about Rule 106, concentrated focus. Especially across the weekend, it was a really turbulent time. In the lead up to the weekend, especially on Friday, the markets turned a little bit red, and when they turned red, it was largely because Gary Gensler came out of the woodwork and he said, we're going to attack Ethereum and Ethereum Foundation. This had a lot of people worried, and not surprisingly, ETH got hit as well as Bitcoin on Saturday. Sunday, we saw the markets retrace somewhat, but they were still under where they were on Friday. Inside the crypto market, there are a lot of macro and micro headwinds. One thing to just note, CZ is getting sentenced. The SEC attacked Ethereum Foundation. The SEC and the Binance lawsuit and Coinbase lawsuit are still open. And there are a lot of alleged securities inside the top cryptos. But the real issue is we never run from the red just because we know that what will retail do? Retail will sell. What will the institutions do? They will buy. The real key is what will you do? Volatility is every trader and investor's best friend. In fact, without volatility, we cannot make returns. The one thing we make sure that we focus on is CTKS structure because that's where price is going to rebound from. Our focus is prepared and not scared at all times. Unfortunately, what typically happens is people, whenever they hear bad news, and if they're stuck inside Zone 1 and Zone 2 at that present time, they tend to run from the market because they're either panicking or getting pretty upset about things. This is because they're focused on certainty, and you'll find that certainty creates terror. After being inside financial markets for nearly 40 years, I can tell you it's all about learning. It's all about patience and rules, especially probability. That's what will make you money. Just going in and gambling, and I've seen recently a lot of YouTube channels are pushing this thing called zero knowledge trading. It's a surefire way to destroy your financial security. Now, what does zero knowledge trading mean? Well, just think about it like this. If you had zero knowledge in a sport that you wanted to play, how well would you do? If you had zero knowledge, if you went to work and you didn't have any knowledge, how well would you do? Generally, if we don't have knowledge, we don't do that well. But if we have a lot of knowledge, we tend to get paid very favorably. There are a lot of people who just give up when it comes to financial markets. And it's not surprising because they're really complex. But when it comes to trading and investing, if you're applying zero knowledge, you're absolutely unequivocally gambling. If you're gambling, the market will mercilessly take your money, no question about it. This is a truth that a lot of people don't want to hear. They want to hear all the good things about crypto and 100x's and 1 billion x's, but you've got to think about it. You make money by your knowledge, and it's always been the case. If you walk into a casino and you just throw money around and not know what you're doing, the house will win. A lot of people inside Zone 1 and Zone 2, they say they're in it for the fun and the thrill. Please don't do this. If you're in it for the excitement, it's better to buy a Tats Lotto ticket. If you want to make serious money, you have to focus on your knowledge and focus being professional. For example, if you went in for a surgery and the surgeon was in it for the fun and the thrill, what kind of result do you think that you would get? Or if the surgeon had absolutely no knowledge? For example, if the surgeon came in and he said, "Oh, look, you're really safe with me. I've watched a couple of YouTube videos and I think I got the handle on this whole surgery thing." Did you go to school and study it? No, I watched YouTube. I know, I did a Udemy course. And besides, he would say, "It's so fun. I'm in it for the thrill." No, you would say, "Hey, get out of here. I want someone who knows what they're doing, who's put in the hard work, effort, and time." This is where Zone 3 and Zone 4 come along. You must focus on your learning. You'll go through a lot of losses because those losses are learning experiments that the market will throw at you. Now in this video, I'm talking about concentrated focus. We have a bit of a background, how retail would look at things and how professionals would look at things. You want to get into these zone 3 and zone 4 kinds of thinking, and you will do incredibly well. The first thing we need to understand, you must have 3 simultaneous strategies. What if the market goes down? What are you going to do then? If the market goes neutral, what will you do? And if the market goes up? A lot of people rely on the news to tell them whether the market will go down, neutral, and up. This is a really huge mistake. It takes a lot of time for things to play out in the market. And also, market moves can happen very suddenly. That's why you must be synchronized in with the market. Always remember, you control the trade or investment, but the market controls the return. And you are always benefited from your knowledge and your courage, and you will always be penalized for blame and gambling. But Ken, how does this relate to Rule 106, concentrated focus? When you're looking at a market and you're not quite sure what it's going to do, and it's got a lot of negative news out there, you must know your structural boundaries from a top side and a bottom side. You must know where price is likely to go. Is it likely to go up or likely to come back? And you can only answer these questions if you know the structure inside the market. To be professional, to get into zone 3 and zone 4, you must know your structural levels, because if you don't know where the structure is inside the market, you'll always look at price as very random, and you'll just get conned by people who say zero knowledge trading and investing is the only thing that you need to do. Just ask the question, zero knowledge, if you applied it to anything else in life, would it make you successful? We know that inside financial markets, CTKS structure determines where price is going. It determines the waves of price. Specifically, I'm going to show you the outcomes of trades on Bitcoin, Bitcoin Cash, Doge, Solana, and Litecoin just across the weekend to give you an idea of what I did. I'll just start with Litecoin. Litecoin was a pretty interesting one, and I made a profit just across the weekend of about $380. When I looked at Dogecoin, it looked pretty interesting, and I turned out with a profit of $638. From Litecoin and Dogecoin, the profit was a little over $1,000. Just having a look at some more. With Solana was really interesting, and a profit of $893 across the weekend. And what about Bitcoin? It was pretty sluggish, but it did turn a profit of about $477. Solana and Bitcoin together created a profit of around $1,300. Bitcoin Cash was a little bit of a crazy thing across the weekend, and when we look at Bitcoin Cash, it threw a profit of around $1,600. I'm keeping this deliberately high level at the current time because I want to take you through the thinking. The thinking is much more important. The weekend profits were approximately $4,000, and living in Australia at the exchange rate that we currently have, that's about 6,000 Aussie dollars. When you consider all the turmoil that was going on, many people inside Zone 1 and Zone 2 would simply say, I'm not getting into the market, I'm going to sit on my hands. And that's a big problem. I wanted to explain to you that you should always stay synchronized in with the market. The key understanding, I knew the structural levels on Bitcoin, Bitcoin Cash, Litecoin, Doge, and Solana. I was also trading XRP, ADA, ETH, BNB, and quite a few other cryptos. I haven't included anything there. I think you get the rough idea. You might be asking, why Rule 106 and why concentrated focus? It's a really good question. A lot of people don't know the structural levels, and if you don't know the structure, you have literally no concept at all as to where price waves will be moving, how strong the price waves can get, and so much more. Also, when you have concentrated focus, you're looking very specifically at specific projects, and of course across the weekend we had the crypto space. Unfortunately, what typically happens, people go bargain hunting, especially just chasing the biggest movers that they can possibly find across high uncertainty times. And this is almost a guaranteed recipe to just lose a bucket load of money. I know I've done it in the past. The important thing to understand, we all start in Zone 1, and then we go to Zone 2, and then through our learning into Zone 3, and then through our positive excellence into Zone 4. This is just a journey that we must all take. If you're stuck inside Zone 1 and Zone 2, don't worry at all about it. We all go through these particular processes, so it's just very, very normal. But the key is, please get out of Zone 1 and Zone 2 as quickly as you can. Get into Zone 3 so that you can focus on your rules, you can focus on your learning, and you can focus on your courage. There's a really huge difference between courage and gambling. If you're gambling, you're going in without any real knowledge. The one thing that a lot of people misunderstand when it comes to casinos, when it comes to cards, when it comes to a lot of particular games that people can play and that they can gain control over, professional gamblers do not gamble. They run the odds. They're mathematical machines. One thing that you'll find is CTKS structure literally gives you the hands of other players. You can look in and see what they're thinking, what they're doing, if they're bluffing or not. Okay, let's have a look at the structural levels on Bitcoin. If you were to look at price structure on the Bitcoin chart, it's been trading in excess of 5,200 days. We can see that Bitcoin has largely gone up. But where was the structural overhead resistance and where was the support? To know that, let's turn on the CTKS structural levels through the indicator. What you will find, this indicator literally gives you X-ray vision. We can see that Bitcoin got captured by this lower level of structural support around that 64,150. It sold off from this level just below 66,000, and we're seeing that Bitcoin is trying to consolidate around this area and turn this approximately around 66,800 plus into structural support. If it does so, that's a very good sign. We could see some really good upward momentum in Bitcoin's price. But we always have three simultaneous strategies playing out at all times. And if you understand the wavy nature of price, this is a way that you can make money. For example, as price is coming down, we're buying on red and we're selling on green. That's the trading methodology. But as an investor, you might be looking at this and saying, oh, I want some cheap whatever it is, in this case Bitcoin. Because when we look at these structural levels, you interpret that the same as any price chart. You could be looking at gold. You could be looking at Tesla, Microsoft, Nvidia, gold, silver. It doesn't matter what you're looking at. It's always the same interpretation. You'll also find that sometimes it can feel incredibly uncomfortable to be inside the market, but these structural levels will give you an understanding as to where price is moving and what's constraining it or otherwise. If you're feeling uncomfortable getting into a specific position, here we're looking at Solana, you're probably on the right path because it does feel uncomfortable to buy as the price is coming down. It also feels uncomfortable to buy and to accumulate and not to sell. What you will find, if you have specific targets that you're keeping in mind, that's where all the magic occurs. And you can also not only buy on the way up, you can buy the retracements such as this one here on Solana. Let's have a look at another trade. We'll look at Bitcoin Cash. And again, it's not really the particular crypto that you're interested in. What you're interested in is the philosophy. You can see I was buying on red as the price was coming down there. That little green arrow says that I bought there and I sold up here. When price came down, you notice that I wasn't buying on the way up, I was buying on the way down, and then I sold these tops, and then I was waiting for price to come down, which I sold there. This in and out kind of behavior is a very powerful way to go. One thing is for sure, by knowing where the structural levels are, you're in a very good position because you literally have X-ray vision on what's happening inside that specific chart. And that's especially what you need. You will find some charts, they move very slowly, such as Bitcoin. After all, it's in excess of $1 trillion worth of market capitalization. And some other cryptos are really, really spiky. Other ones, they take a lot of time to get going. The reason that I showed those trades, I wanted to show people that you have to have that three-dimensional strategy in play all the time. I was counting on the price coming down, I was counting on the price going up, and I was counting on the price consolidating. All three positions I held at the same time. And you can see with a couple of those trades, the price was just going down and down and down. It looked pretty horrifying, but then it tends to turn around, and this is what we always find, especially inside crypto. You'll find it as well inside commodities, forex, and the stock market, but crypto tends to reverse very quickly. One very problematic thing about forex, it can often take about a month for a position to come through, and what I mean by that is for you to get the right setup. The thing that I love most about crypto, oh goodness, don't even talk about the stock market, that's way worse. For example, some people inside Forex especially, because you need to use a lot of leverage. If you're using leverage, please be careful, and some beloved community members pointed out their experiences with leverage. You really need to know what you're doing. That's why I love crypto, because the exponential nature of crypto, and by the way, power, is a lesser power than an exponent, just a mathematical thing to just ponder. If you want the X-ray vision, you really need CTKS structure. It is an absolute game changer. And if you would like all the trading view indicators for all of these charts, which is a far thing from zero knowledge trading and investing, you need to know where all of the tier 1, the tier 2, and the tier 3 charts are headed, because that will give you an incredible insight to stay synchronized in with the market. All of those indicators are available from ctksmethod.org. And you can see in just a couple of days, if you can turn a couple of thousand on the weekend, you're doing pretty well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.